as this comes up next week. All of these, actually. Rupen Rajguru is with us, Head of Equity Investment Strategy at Julius Baer. Rupen, good to have you here. You know, we were earlier discussing the fall in all EMS companies. Kaynes, of course, is much discussed, the others less so. But the others are also down 4-5% in some cases. Do you think, Rupen, this is, you know, growth rates are 50%, 100%, even 100% in some cases. 26 over 25 in some cases. If FY 26 over 25, maybe it'll slow down in 27 and 28. But focus so far has been on growth rates exclusively. How fast can you grow? Cash flows not so much. Do you think that's coming into the spotlight? I'm just trying to connect a thread through what's happened with Kaynes and some of the others today.
Yeah, hi, afternoon, Prashant. So whenever any sector or any company grows at a very high pace, it's always important to look through the lens from a cash flow perspective. So while I'll not get into the details of the kind of aggressive accounting which one of the sell side broker has highlighted, but typically, and as you rightly said, when there is one instance, there is a general feeling that the similar things would have been done by others, and hence there is this market reaction. And if I were to just recall your memory, while it's not talked about, but some time back, I know the talk of the town was the RBI AQR review from a bank's perspective, right? Whenever RBI came out with certain things on the way some banks have done underprovided as compared to what they should have, and we have seen not only that bank but similar banks with high growth also had a similar market reaction. So moving that aside, purely from a EMS perspective, yes, whenever there is high growth, and to top it up, the margins of these companies are also pretty low. So we have to be cognizant of what kind of margins these companies are making, and now clearly the focus of all the investors also would be on the actual receivables, cash flows, and all other parameters. So yes, whenever any stock is priced to perfection and builds in a lot of growth, a small negative news it's not that the growth has got punctured, but definitely the market is now looking it from a different lens and might derate it to some extent, and that's what is exactly happening.
All right, hi Rupen, good to see you. And Rupen, actually Q4 has been quite a contra quarter, right? India has outperformed emerging markets after underperforming for the first 3 quarters, and tech has come back. What do you have to say about that? Do you think things will start looking up from here? And your view on tech?
Yeah, hi, Nigel, afternoon. So I think that's the usual case, and if I were to just step back and look through, from any investor, and particularly a global investor standpoint, what are the 2-3 things that they look into? Whether a particular asset is a macro trade. So probably globally this year, the macro trade has been gold. 2, whether it's a momentum trade, and AI is definitely, and anything and everything related to AI has been a momentum trade. And 3 is mispricing. So probably China was a mispricing trade. So India was not featuring anywhere, and hence we have been seeing a constant outflows. But yes, beyond the point, when the earnings growth trajectory was starting to move up, definitely there is a scope of a little bit of mean reversion, and which is, as you very rightly pointed out, India in the 4th quarter, while too shorter time period, India has outperformed EMs and even US, and IT index has come back into reckoning. And particularly on IT, Nigel, if you recollect a couple of months back, what I had shared in your channel, that typically IT as a sector usually witnesses the highest differential between 52-week high and 52-week low. So any year you take into consideration the large IT stocks, also the difference between 52-week high and low is around anywhere between 30 and 40%. And from a valuation standpoint, that 18 to 22 band is the band at which typically it trades when there is no growth focus. So when probably a few months back it had gone to around 19 odd P multiple purely from a dividend deal and all other perspective, there was a good sounding base. And probably in the near term also the rupee tailwind has helped, and that has led to it going back to 2021 odd P for some of these stocks. From here on, probably in the extremely near term, the news flow of INR will keep the IT stock excited, which is probably exactly happening right now. But now they have reached that fair valuation, and now I think the more positive commentary coming from the companies will only take it higher. So probably if they are in their upper band in the extremely near term, and it might consolidate here and even correct if there are no positive news flows from it.
All right, Rupen, sorry, apologies for this, but a short but effective chat. Thanks a lot for joining in, Rupen, and filling us in with all of those details. I don't know whether we speak later this year, but have a good festive season and then catch up in 2026 again. All right, it's that time of the show when Nimesh joins in to tell us what is he picking up in D Street Chat. And Nimesh, I believe a lot of